Hey, what's going on, guys? My name is Steve, and welcome to the channel where we talk about the joys of stock market investing and long-term dividend gain. If it's your first time stopping by the channel, do me a favor and hit that subscribe button. Trust me, you will not regret it. And if you're a returning subscriber, welcome back. Guys, listen, Fed Chair Powell has just did a speech and has said, as everybody anticipated, that they would go up 0.75 basis points, and they did as announced. Now, the market has responded. We ran green for a little bit. You know, once it was realized that he was going to do as anticipated with raising the interest rates 0.75%, then all of a sudden it fell off a cliff when he went and had his press conference. And he said a couple of things that were very telling that I want to get into in this video. But before we even jump into that, let's just go into a little bit of the surface and the preliminaries of what he said, and then we'll get to the good stuff. The first thing he did was, he just preached basically, price stability, price stability, price stability. Like everybody knew, we want to get these prices down. We want to get inflation, yada, 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 everything else, everybody knew. And he also says, it's a lot of it was the norm. We're going to continue to raise rates as needed. He said it again, and they'll always say that. Then he said, at some point, we will slow raising the rates, right? And for some reason, when he said that, the market went green, and everybody priced started. I guess they must have priced in. Okay, well, we knew he was going to do the 0.75 interest rates, and we're already at 3.75% because earlier they said it's possible they're going to try to go to 4.6%, in 2023 and top out at that, right? Now, if you're at 3.75% and you're at 4.6 next year, a lot of investors and a lot of people were like, okay, well, we got less than 1%. So come December, he might not raise 0.75%. So a lot of the market went green on the premise that, okay, the next rate hike might not be 0.75%. It might be lower, thus hinting a slowing in inflation. Nowhere near that. Because what's crazy is, as the market rose off of, the slowing rate, he said a couple of things that was crazy to me. Well, not crazy, but they made sense. First thing is, a couple of people in the media asked him a couple of good questions. And I was like, okay, this right here explains a lot. And as the market was green, the market went back to red after a lot of this stuff was explained. Now, before we get into that, a lot of what he was saying, was, a lot of the questions he was asked was basically the same question, just from a different angle. And I know he was probably up there like, oh man, come on, I just answered that. But you know how it is with the media asking questions. They're trying to get the best articles they can write. But this is all it was, basically, in a nutshell, guys. Give me 1 second. I'm sorry. He said 10 things got to happen for them to slow rates. A lady asked him, she asked him, hey, at what point we going to start slowing rates? Will it be at the end of the year or this? And he gave a good answer. He said, listen, we don't know when it's going to be. It could be next month at the meeting, or it could be next year. We don't know. But this is the one thing he said. He said, first thing we have to do is see a series of down monthly readings on inflation, saying inflation's going down in consecutive months. That's the first thing we'll even look at before considering lowering the rates. And then he doubled back and he said, the second thing is we have to look at all of the measurables, all of the spending, the yield curve, how all of that is coming down. If all of it is making, and that's a key word, if all of it is satisfactory, then what he said first about a series of down months, then they'll take that serious and start slowing the economy. I think that's the first blow that he struck, where the market was like, okay, we're not going to buy nothing. We're going to continue to sell off. That was the first thing. Because when he was speaking, I think he was thinking while he was speaking, and he was like, I shouldn't have said a series of down monthly things, because I mean that's common sense. And then he went into, okay, we got to look at all of these measurables, all of this other things that go into the economy, and we got to make sure everything is bona fide, because they're trying to avoid two things. They're trying to avoid inflation entrenchment, right? That's a big thing. They're trying to avoid entrenchment, where we get stuck in an inflationary period. And the second thing they're trying to stop is whether they get a false reading and then they think the flames have cooled on inflation, and all of a sudden it flares back up and it takes off, and then it's like out of their control. And then they're sitting there with egg on their face and they look crazy. That's the second thing. He said, and this is another thing he said that was telling us the second part of what I was going to tell you. He says, when they had their September meeting, looking back at it now, the numbers that they came up with, and as far as where they had the 4.6%, where they had to raise the rate, it came back, the interest rates higher than expected from that September meeting. They went and did the numbers again, and it came back higher. So, guys, I'm telling you, it's very, very, very possible you could see 5% interest rate hike before this thing starts to cool down. And it might be more than 5%. And he plainly put it out there. We had the numbers wrong. This is higher than we expected it to be. So that 4.6% next year, you might as well throw that out the window, because it might not be true. And they might have to go over that. So come December, a 0.75 interest rate hike is possible, because you can see they're not playing around. They said, listen, we're going to do whatever we got to do. They said, we know. And he said, before I get into all of that, excuse me, he said, this affects a lot of industries, a lot of companies, and a lot of families. And we are very well about that. But we have to do what we have to do to get inflation down. And we will do it. They're already telling you, we don't care. We got to do this. This is our job. They pay us to do this. We're going to make sure this goes. If we got to raise rates from here to the moon, we're going to do it. Don't quote me on that, but he basically told it's no, we're going to be hawkish on this whole thing. It don't matter. So, second thing, another lady said, and this was telling, lady says, what are the two principal, what is your principal focus? He said, well, the principal focus right now is this. He said, how high to raise the rates. You know what I mean? Remember I said it could be possible that it's going to be 5%. It's going to be as high as 5%. Remember, we already at 3.75. So he said, say we go to 5%. And then he says, the second part is how long to keep it there. And he said, just like this, he said, we're going to get the interest rate high, real high. Then we're going to keep it there until all of the measurables, remember we talked about it earlier. He said all of the measurables are showing signs of decline. Not just a couple of measurables like spending and stuff. We need everything. The housing market, all of those to have decline. Then we need more than just a couple of months. So guys, I'm telling you, once they get this thing where they starting to get all the liquid out, they're going to really press it until you don't see no drops coming out of there. It's going to be a hell of a strain on this economy. And he already said it. And he done said it multiple times. So as an investor, jumping out of, what was said today, and I appreciate the honesty of the man. What was said, I'm telling you, there are going to be a lot of buying opportunities. Have your cash on hand. Do your due diligence with getting your portfolios in order, and you get ready, because a lot of stuff is going to fall right in your laps like we speak about all the time, and it's going to be excellent buying opportunities for everyone, whether you are investing $50 a month or $50,000 a month. Everybody stands to gain if you do this thing the right way and you pick the right stocks and you have the right strategy. But yeah, guys, I just want to talk a little bit about this thing. You know, like I said before, and everybody else is saying, it's going to get worse before it gets better. And I hope you guys are prepared. Hopefully you are prepared. And if you found this video educational, hit that subscribe button. As always, like, comment, and share. Tell me what y'all thought about Fed Chair Powell's speech today. You know, how you see it. What's your strategy as far as investing going forward? Because I'm telling you guys, this wealth transfer is real. And a lot of people going to make money. Hopefully, you and me are at the end. In the end, we'll make money as well. As always, I appreciate you spending time with me. And I'll see you guys in the next video. Take care.